Warning, a recession is on the table. What is the yield curve telling us right now? I'll go into it, so stick with me, and at the end, I'm going to give you your free trade alert.
Hey, I'm Scott, founder of Trade Alert HQ and professor at the Financial Freedom Academy. My goal is simple. On this channel, I work for you to take your trading and investing game to the next level. I'll give you real-time strategies and trade alerts to help you on your road to financial freedom. After leaving my corporate job in 2016, I've been trading stocks and crypto full-time while traveling all over the world. I'm here to pass along everything I've learned so you can skip the guesswork and start making winning moves right now. Every week, I'll bring you in-depth stock and crypto analysis, real-time buy and sell alerts, and answer any questions you have so you feel confident in every decision you make. So what are you waiting for? Hit that subscribe button and join the Trade Alert HQ family. Your journey to the next level of financial freedom starts here.
Did you know that every recession for the past 50 years has been predicted with this one signal? Let's dive right in. Looking at the traditional markets, we've got a lot of market activity. The markets are jumping around on every little word that Trump is saying, and everything's up. Really, the stock market is at all-time highs. Bitcoin is at all-time highs. Now, that's fantastic. I hear a lot of people say, now that Trump's in office, the market has to go up, okay? This just isn't true, and I'm going to cover this in a moment. Now, I think we're in an okay position right now, but let's take a look at some of these news headlines that are very misleading. Stocks get Trump boost. Dow edges higher as Trump demands lower oil. Trump says he'll demand interest rates to drop, okay? Now, that's good, by the way, but essentially, let's cover what would happen if we essentially cut interest rates too quickly, all right? And this has nothing to do with Trump or whoever's in office. It's just like a market cycle. Let's look at the yield curve inversion. Now, we're going to go to the FRED page, which is the Federal Reserve Economic Data. You can look this up yourself. Now, this is the 10-year Treasury and the 3-month Treasury, and every single time over the past 50 years that this line breaks back above yield curve inversion, that means a recession kicks off in the United States within 6 to 18 months, okay? So it doesn't matter who's in office, essentially it's happened every single time. If you look back here in the 90s, we came above, we basically had from November, and the recession started in the gray area you see here by June, okay? We crossed up here before the dot-com bubble. Let's see, that was in December, and by the time we were in May, recession kicked in. Let's look at the financial crisis of 2008. I know most people remember that one. We crossed up here in July, and then we were in a recession by December. So here's this little blip on the radar. That's actually the COVID crash. So it even predicted the COVID crash. We recovered quickly from the COVID crash. Okay. That said, we're back above again. So we need to pay attention. That doesn't mean the market's going to crash today. In fact, we could surge a lot higher. For example, if we lower interest rates, right? That's in the headlines. Essentially, we could create a huge asset bubble that's already going. It's already a bubble, but it'll get bigger in stocks, crypto, real estate, you name it. However, the crash would be much larger if that happens. So let's pay attention to that.
Stay ahead of the game with real-time trade alerts. Hit subscribe and turn the notifications on so you're always the first to know about the latest stock and crypto moves. Your financial freedom is just one click away. Let's crush those gains together.
Moving on to another very important piece of data to consider is the jobs numbers. So today, the jobs numbers came in a little hot or a little higher than expected. That means more people are out of work than we thought. This is a good recession predictor in the sense that when you see the jobless claims go above 260,000 right here on the chart, then the recession is likely, okay? We're working our way back up to that level, and we bounce from support here around 200,000. So we need to keep an eye on that. One concerning thing is this is a momentum indicator, the SRSI, and it's crossed up, meaning momentum could be coming back, and RSI is also poised up. So we want to watch those job numbers, okay? let's take a look at S&P 500 futures. Now, a lot of you have stocks and your portfolios are definitely at all-time highs at this point, and that's a good thing. But what we need to know about this is basically this thing has just gone up and to the right, all right? It's not very natural for the stock market to just go up and never come back down, all right? It has to average out at some point, so that's exactly what we're going to identify. Now, it broke down out of this wedge, but now we've reclaimed support at 5,900. We're testing resistance at 6,140. The upside target for ES is 6,600, okay? And we can actually go higher than that. The downside target, if we break down, there's a support one at 5,700, but a deeper retrace would put us down here around 5,250. That's the downside target. I'm liking the upside target because momentum is coming back. SRSI is crossing up, and RSI is trying to break this downtrend. That means we could get even more of an explosive move higher, so we want to keep an eye on that. The VIX isn't pricing in anything right now, or else I'd show it to you. So that's the volatility index. It looks okay. Now, I want to bring up something. So in my last upload, T. Motton here asked me, I'd love to see some content using your methods for technical analysis on maybe like a shorter day time frame or a shorter period. So I want to dive into that right now. Let's take a look at, now this is Bitcoin on the weekly. Bear in mind, anytime you trade or invest, you want to look at the high time frame has the most power. That means the monthly and the weekly. So this is the weekly, and on the weekly, Bitcoin is basically consolidating in a potential bullish pennant where it broke out, tested resistance, and it came back and back tested support, and it's just kind of hovering around this very important level, by the way, at 104.6. If we break above 104.6, I'm looking for 114,000, and then on the higher time frame, we're looking for 129,000 per Bitcoin, or possibly topping out between 138 to 140,000 per Bitcoin. I used a monthly high time frame to find that level. I don't have time to explain it. If you want to learn these concepts, by the way, check out the link in the description to the Financial Freedom Academy. We'll teach you how to do this. It's free to get on the email list, so you may as well check it out. We give you a market report once a week on Wednesdays too, so it's pretty cool. Check it out. Let's look at a smaller time frame. On the daily, what we have here is a rising parallel channel. Bitcoin came from the bottom and it touched the top. Bounced off support, touched the top. Came to the bottom, actually it did a small bounce, came to the bottom again, right around 91.1, rallied all the way up during Trump's inauguration, spike in volatility up to this almost 110,000 per Bitcoin. Now, in a video in the past I mentioned, during the inauguration, we're going to get a lot of volatility, and we sure did, okay? We spiked up to 110, we came back down here to 100,000, so $10,000 swings are normal now in Bitcoin. We're holding support one around 101 on the daily time frame. I'm looking for consolidation and a move up into about 112 to 114K per Bitcoin. Now, that's on the daily, okay? Let's dive into the 4-hour chart. On the 4-hour time frame, when we're looking at Bitcoin here, I've noticed there's a point of control. See this big volume pocket? Right here around the high time frame from the weekly chart, fib resistance around 104.6. If price cannot break above 104.6, it's eventually going to come back down here and test 97.4 and possibly 94.7, okay? This is what's known as a diamond pattern, and I'm going to explain. They can break up or down, usually down, but sometimes up. Now, how do you measure the move on this pattern? By the way, remember, this is a 4-hour time frame. You take the center and you measure it. So the move up would put us right around my target, which is 114. Now, you can see this little red line. That's because I have a sell already preset there. So when we go there, if I'm asleep, basically it's going to sell because I won't be awake to see that, right? Now, what happens if we break down? If we break down out of this pattern, let's take a look. We're going to go and probably test these lower levels that I discussed. Okay, so if we come down here, don't be totally surprised. That's on a 4-hour chart, not a big deal. On the weekly, when you look at something like that, coming back down here, you're looking at like right around in, let's see, 97, right around at the 90 MA pink right here. We could come back down there, okay? And when you look at it on the daily, a smaller time frame, 97, that's the point of control where the most volume has occurred in this range. It's an important area. It wouldn't be the end of the world to come test it, all right? So that's why you want to use multiple time frames when you trade. So again, check out the link in the description. We'll teach you how to do this if you're interested. That brings up something important, which is your free trade alert. Let's dive into this one. There's a lot of excitement around POPCAT and Solana memes, okay? Why? Because over the weekend, Trump launched his own meme coin that surged, okay? Some say he made enough money to buy Greenland now with that money. That said, what it did as a result, a lot of Solana ecosystem coins are waking up. Now, I had POPCAT as a trade alert from over a month ago if it came down to this level right here at 43 cents. You can watch that video. I literally had the diamond top short pattern. Now, at that time, we said it can break up or it can break down. Ultimately, it broke down. That was the measured move, okay, out of the pattern, and it came down here. This is the measured move pole, okay? I'm going to delete that. So, we're at the measured move now. This is a long alert, or buy, longing is buying, and essentially the upside target is $4. So we're talking about going from 44 cents to $4, which would be a fantastic trade. That said, use risk management. I'm not a financial advisor. I'm just saying this is a good buying zone. Use your head. Don't bet the farm here, and don't blame me, because meme coins are risky, okay?
Stay ahead of the game with real-time trade alerts. Hit subscribe and turn the notifications on so you're always the first to know about the latest stock and crypto moves. Your financial freedom is just one click away. Let's crush those gains together.
If this thing breaks down, it could come down here to 22 cents. But what I like about this is SRSI is trying to reset and cross back up and put some momentum back into this. And RSI looks beautiful here, where it's kind of like holding this downtrend about to poise up. That tells me a bounce is likely coming. Actually, it already came, but it's still going to keep running to higher levels. If you wanted to, you could take partial profits at 72 cents. Don't forget to hold some of this coin just in case it does make a run up to $4, because that is possible. And that's been your free trade alert. I hope you enjoyed it. Please let me know in the comments section, what do you want to see? I'll chart whatever you like or any questions you have, and I can't wait to see you in the next video.
Thanks for watching. Your support drives this community. If this video brought you value, hit the like button and subscribe. Remember, here at Trade Alert HQ, you're the first to know about real-time trade alerts. We're growing fast and you are at the heart of it. I'm here working for you, so let's keep this momentum going. Your financial freedom starts here.